Good afternoon, good evening, wherever you may be, and welcome to this webinar on crowdfunding meets the ESCOs. So, as you know, we at the Global ESCO Network, we are here to service the global ESCO market and to promote the ESCO as implementation framework as a response to the climate challenge we are facing. And one of the topics that usually comes or where support is needed is financing. Finance is the top three elements that usually are listed as barriers and needs from ESCOs, from ESCO practitioners, barriers in relation to access to finance. So this led us to looking for potential topics to cover further here in 2025, and also will form part of some of the topics that we will cover before the end of the year and at the start of next year as well. This specific webinar touches upon what we call innovative financing solutions and zooms in on crowdfunding. So it explores the key role of building renovation in meeting here specifically the EU energy and climate targets. The initiatives that we have here present today are based in the EU, but we believe that the concepts and approaches are applicable in a global context. So whichever region you might be based in, I think you can have some interesting learnings and inspiration for action in your own regions. We have with us the two initiatives. One is Ener2Crowd, which is an Italian-based company that facilitates financing for, amongst other ESCO projects. From Ener2Crowd, we have Nicolò Sovico, which is the CEO and co-founder of Ener2Crowd, which is Italy's first lending crowdfunding platform, which is focused on not only energy efficiency, but also renewable energy. And under this initiative, they have been able to mobilize over 50 million euros through equity and lending campaigns, basically empowering citizens to crowdfunding to invest directly in energy efficiency and the energy transition. Nicolò is a nuclear and energy engineer from the Politecnico di Torino, which is one of the leading universities in Italy. He has international research experience from the University of Illinois of Chicago. He has managed large-scale EPC projects and energy efficiency projects for major industrial clients and ESCOs. And he was also recognized amongst Forbes Italy's 100 under 30 in the energy category. With him, we also have Giulia, which is the project manager at Ener2Crowd. She manages the EU-funded initiatives on sustainable infrastructure, deep building renovation, and agrivoltaics. She has a background in business development and innovation management across the clean tech, agri-tech, and biodiversity sectors, and has supported numerous startups in their market strategy, investor readiness, and acceleration programs. She has a degree in economics from the University of Bologna and collaborates with the European partners to scale innovative financing models that connect citizens' investments, biodiversity, and the energy transition. The second initiative that we will present is from EnerSafe Capital. And we have Csaba de Csiky with us as well, which is the chairman and senior partner at EnerSafe Capital. I will give a proper introduction when his time comes to speak. And at this stage, I think I'll leave the floor to Nicolò. Nicolò, if you will join us, and please, the floor is yours.
Hi, Federico, and thank you so much for this presentation and for introducing me. As you said, I'm the CEO and co-founder of Ener2Crowd. And Ener2Crowd is today, was born as a startup in 2018, and today is one of the leading platforms for alternative investments in Europe. We are based in, our headquarters is based in Milan. We also have office in Spain, and we are able to operate all over the Europe. So in a very short and briefly overview, what is Ener2Crowd? Ener2Crowd is a platform and app where everybody can directly invest in projects which are linked to sustainability. That could be, for example, renewable energies like photovoltaic plants, like wind farms or hydro plants, and energy efficiency projects. We work a lot with the ESCO in Italy because we can give them like alternative finance for their projects.
So I'm Giulia, and first I'd like to give a little deep dive on why there is this urgency and why building renovation matters so much in the context. And so buildings are actually the single largest energy consumer in Europe, and it consumes around 40% of EU's total energy use. And actually 75% of the buildings are energy inefficient, while also the EU has around a 3% annual deep renovation rate by 2030, but unfortunately the current rate is around 1% and it's far below the target that the EU has set. Specifically in the case of Italy, around 60% of Italian buildings are built before 1970, and actually those buildings are not very energy efficient. The current renovation rate in Italy is around 1.1%, which is around the European average, but still it is far below the target. For example, in Italy, we had this incentive called the Super Bonus 110%, which initially boosted the demand for this renovation, but a lack of stability followed after this bonus has ended. And essentially, it was an incentive program given by the government that will repay 110% of the investment with tax credits within 10 years. But unfortunately, it has only already ended. But as we all know, that the ESCOs can really serve as an impactful financing strategy for these type of renovations, and they're essentially the how of the energy efficiency agenda through energy performance contracts that are always talked about. So ESCOs, they can offer guaranteed performance-based energy savings, and actually Italy has one of the largest and most developed ESCO markets in Europe, which is driven by both regulations and incentives, but still, however, there are challenges that remain. So some of them is because the projects are usually small. It's a lengthy process to do all of this, and there's still ambiguities in the legislation. And specifically from the report that is given by the Global ESCO Network, specifically the regulatory barriers for energy and service companies, quite a lot of barriers have been identified that are holding back the ESCO growth to meet those energy and climate targets. Some of them are split incentives, lack of accreditation systems, complex model contracts, fragmented small-scale project, and policy instability and inconsistent incentives. But today, I'd like to focus on one of the most important ones and the most pressing ones, which is basically the difficulty to access the financing despite its high ROI. And we believe that crowdfunding can be a very impactful tool to bridge this gap. And I pass the floor back to Nicolò.
And as Giulia said, of course, the crowdfunding, the crowd investing in general, because consider that 2 years ago, in November in 2023, all the legislation in Europe changed, and thanks to the European Commission, every country implement like a new law for the crowdfunding, which allowed all the single platforms to operate all over the Europe with one single authorization. Because remember that we are a company which is under the law of in the finance, no? So in the collecting money to the retail investors, with all the difficulties that follows this kind of activity. But basically, Ener2Crowd, we as Ener2Crowd have two different kind of alternative finance opportunities: the lending one and the equity one. The lending one is basically very easy. Because thanks to the lending, all of our investors, and today we count more or less, we will see the numbers later, 20,000 investors on the platforms. And with the lending opportunities, people can directly lend money to the small medium entities and companies which develop like the energy and energy projects or energy efficiency project. And in this way, it could be an ESCO, because we financed a lot of ESCOs in Italy and in Spain. And this kind of lending, of course, is like a debt for the ESCO. No? So we have a lot of investors which lend, every single one lend money to one company. And what the company, of course, from its side, has single installments that can be defined with the platform and with the investor. Usually we use like installments every 3 months. Where the company pay back the principal plus installment plus interest. The equity crowdfunding is a completely different instrument that is mostly was born for the startups, but not only for startups, because today we also have a lot of big companies which want to do crowdfunding with the equity system, with the equity tool. With the equity crowdfunding, all the investors don't lend money to the company, but became shareholders. So they buy, investors buy the shares of the company, and of course it's a completely different method, a completely different financing method, because from one side they have a financial contract and a debt contract, of course. In the other side they receive shares of the company with all the risks associated to both of the tools. Giulia? And basically, with Ener2Crowd deals with different stakeholders for every single campaign, because as I said, we have proponents that can be also the ESCOs, but not only the ESCOs, because we also have technology providers. We also have developers of PV plants, hydro plants, or wind farms. So every company, of course, the proponents have to be juridical persons, so companies based in Europe, not only in Italy, but all over the Europe, because as I said before, we are allowed to operate all over the Europe thanks to the new European regulation. And on the other side, we have the investors that up to date, 99% of our investors are retail investors like us, which can start to invest from 100 euros. But also we are dialoguing with professional investors, and as we will see later, we have different banks which are looking at this kind of instruments, and different investment funds that can invest with the retail investor. So, as I said, we have these two kind of different fundraising instruments, the lending one and the equity one. They are completely different instruments, but the goal is the same. So the goal is to fundraise, to fund a project. And they are similar in some ways, the campaigns, but completely different for the instruments, because the duration of the campaigns are more or less depends, of course, on the feature of the campaign, but can reach also 3 months, even if we more or less in 1 month finance all of our projects. The form of financing is completely different, because for the lending crowdfunding we have a loan, and for the equity crowdfunding we have the purchase of shares or equity stake. How can investor gain money? For the lending one, of course, they have a financial contract where investors receive an interest rate based on installments that can be every 3 months. And for the equity one, they can, of course, receive the dividends distribution or the liquidation in case of the company exit. So the equity one is a long-term investment. The lending one is a short-term investment. Of course, all of these two tools have different benefits that we can see. For the lending, we have, of course, a flexible loan, because consider that our loan with the crowdfunding is completely different to a bank loan. First of all, because we are much more flexible than banks. In some cases, we ask limited guarantees, and usually, I mean, in Italy, banks most of the time ask a lot of guarantees on the loan. Of course, it also depends, because we also play with the interest rate. Of course, we have a higher interest rate than banks because we don't usually ask guarantee, but it depends, of course, on the projects and on the company. For the equity tool, of course, the focus is much more on the growth of the company, as I said, because especially we do equity for startups, and for the goal of both of the tools, of course, are the engagement of people into the participation and into the financing of a project. That can be, I mean, for example, a local community that can directly invest in a PV plant close to the community, as we can see in the next slide, Giulia. Oh, sorry, it will be the slide later. This is basically the process we use in order to launch a campaign. Of course, consider that all the proponents are juridical person, so are companies. So we need to do a preliminary evaluation on the company, because first of all, we need to do a credit check on the company, on the ESCO or of the small medium entity company. We define with the project owner and with the proponent the project itself, so also all the details of the loan, and we launch after these activities the fundraising. So the fundraising can length from I mean 15 days to 3 months, and then it starts when we close the campaign. It will start the distribution of funds that for the lending crowdfunding are the installments. For the equity are completely different tools, as I said, completely different repayment, as I said. We are unique for this kind of future because we are able to target returns with a lot of companies, in particular big companies like Enel, RWE, Edison, that is the Edison is the EDF in France. We do a lot of projects with the goal of the engagement of the local communities, and we are able to give different interest rates based on the residence of where people live. So people close to the project, to the, for example, the PV project, can gain a higher interest rate than people who live far from the project. This is what we do because we want to, I mean, give advantage to the local communities. So local communities can get a higher interest rate than people because are directly they receive a direct impact from the building of the PV plant, for example.
And to give a really clear example, let's say, of how we're doing this and how exactly we will be moving forward with this as well, I like to bring up LegoFit, which is a Horizon Europe project that was funded a couple of years ago, where we will be testing performance-based interest rates. So on top of having different interest rates for different communities, we will also have a different interest rate. So generally, the project's aim is to design and validate an integrative approach to accomplish energy positive homes based on innovative solutions that can be replicable across Europe for construction and for renovation. And specifically in our case, we'd like to define a performance-based interest rate with LegoFit partners, including EOS, which is an ESCO in Spain. So for example, in this case, we will be taking the building residents and giving them the interest rate with the base, so the normal interest rate that we define with the project owners, so the base, and including a bonus based on the performance, while all of the other investors, so outside of the building residents, they will get a normal interest rate, which is the base rate. And how exactly we are going to do this? So first of all, we need to identify the predicted savings that are given to us by the ESCO. So how much the ESCO is planning to save in the next couple of years. Then we also need to understand the actual savings. So these actual savings need to come from a platform where we can actually see them and they can be verified. And then we need to do a difference between those two numbers. And then we will understand the performance factor. and thus we can base an interest rate adjustment based on this performance factor. So for example, if there is a negative performance factor, this indicates that there are more savings achieved. So there is a negative difference between those two numbers. A positive one instead means that there are less savings than predicted. And based on that, so if there is, let's say, a 0 to 5% decrease in the performance factor, we will add an additional interest rate as a bonus for those building residents. So an additional 0.5%, or in the case of 10-15% decrease in PF, we will have an additional 1.5. So thus we want to really involve, let's say, the building residents, not only in the decision making of what type of solutions are being implemented, but also in the financing, and thus also benefit from this ESCO model. And another reason why crowdfunding can be such a great instrument is because it unlocks the citizen liquidity. So for example, Italians have a total savings of 6 trillion, while Spanish savings are around 2.7. And I mentioned those two countries because this is where we normally work in. And also because crowdfunding can really offer a very interesting interest rate for the citizen liquidity, which is usually between 6 to 15%. For retail investors on our platform, let's say the process is quite intuitive. So essentially you just have to register for free on our website. Then you have to do the profiling, of course, which is the MiFID, and the wallet activation, wallet top up with a bank transfer, for example. You can select different projects that are available and active opportunities, and then you can manage these projects all in our website through the portfolio management system. And you also receive all of the capital and interest and dividends through that platform as well. So not only, as Nicolò mentioned, we work with retail investors, but we also partner together with institutional investors. So for example, Atlas, which is an anchor investor for our ESG projects, mainly targeted at small and medium entities, which also can be ESCOs. So essentially, it increases the financing capacity that we can offer to the projects that apply for Ener2Crowd. And thus, we also do a double due diligence. So thus, we have greater investment security thanks to that. And of course, it also offers a concrete support for the energy transition. Not only that, but also the alternative finance, it is a booming market. So the annual growth rate in Italy specifically was 124% from 2015 to 2022. Italians are also increasingly relying on digital tools to invest their savings. And of course, as we saw, based on the previous numbers of the savings of both Spaniards and Italians, there's still significant room for growth in Italy and across Europe. So why is this happening? We think it's because people are more and more aware of the climate crisis, and they're more and more willing to participate and actually have a very good impact and a more tangible impact to this climate crisis. And then from the perspective of finance, there's turmoil and heavy penalties for companies that don't invest in sustainability or adapt their business model. And they're also seen as having no future in this sense. Then specifically when it comes to numbers to crowd investing in Italy, so a total from 2019 to 2024, there was a total of 500 million euros invested. And we can see that it's growing quite well as well. From 2021 to 2022 and 2023, there was quite an increase. So, for example, from 2022 to 2023, it's from 117 to 170 million raised. And we think this trend is going to continue. Then specifically for Ener2Crowd, we position ourselves as a non-real estate platform, specifically in crowd investing for SME lending. Then when it comes to the interest rate themselves, it is an interesting alternative to other instruments because it offers higher interest rates. So in recent months, for example, inflation in Europe has slowed, thus promoting the ECB to gradually cut the interest rates to support the growth and facilitate access to credit. Currently, the 3-month Euribor stands at around 2%, and the 3-year Italian government bonds, also known as the BTP, yields around 2.3 on average. and both of them are declining compared to the average over the past year. So as you can see in the graph, you can see the Ener2Crowd's portfolio, where we offer an average return of over 9% with a spread of more than 7% compared to benchmark instruments. So the green one is Ener2Crowd, and the orange and the yellow are other types of more standard instruments like the BTP, for example. In general, the investment trends for the energy transition are looking quite good. There was a total of $2 trillion invested globally in the energy transition in 2024, which is up by 11% compared to the previous years. Still, however, there is a need for increased investments. So right now, 5.6 trillion are needed from 2025 to 2030 to align with the Paris Agreement goals and to achieve carbon neutrality by 2050. And I'd like to end our part of this webinar by explaining some difficulties that are seen as barriers and challenges to crowdfunding platforms. So from the investor side barriers, there is still some confusion with reward and donation-based crowdfunding, which is platforms like Indiegogo or GoFundMe, which are still crowdfunding, but it's a completely different approach. So in our experience, we still see that there is some confusion between these type of approaches. So crowdlending and crowdfunding just by donation or rewards-based. There's also a different type of perceived risk when it comes to crowdfunding platforms and crowdfunding projects, because it is a relatively new, let's say, approach to raising funds. Then there's also the retail investor tax obligations, which could be quite complicated depending on which country you're in. And especially as a starter, it could be a lot to take in, and it could be a little bit of a barrier to get started. But I mean, of course, it's really important for crowdfunding platforms to also provide this type of information for their investors. Also, it's not such a big issue, but it could be a longer process to sign up the necessary because of the questionnaires that are mandatory, like the MiFID, for example. Then from the company and proponent side barriers, so specifically for the ESCOs, for example, there is some fear of managing many investors, which is not really true, because in the end, the crowdfunding platforms are the one who handle all of the payments, all of the bureaucracy, and essentially they don't have such an issue to manage these investors. Then there's also complexity of required documentation, which is the case for crowdfunding platforms. Like a little bit more documents would be necessary to get this loan. And there is a fundraising cap of 5 million per year per project. Per company, which could be an issue if there would be companies that would require more funds. So in the case maybe of super ESCOs. Still, it's not really an issue for us because normally we focus on smaller projects. But for the growth and the perspective of ESCOs, it could be an issue. But despite this, we have funded over 200 projects so far, and we have, as Nicolò previously mentioned, over 20,000 registered green investors, which are the retail investors. And we offer an average interest rate of around 8%. And over the past, since 2019, we have raised 51 million euros on the platform for the different projects. And we also have raised 9 million euros raised for securitization with another specific tool, part of Ener2Crowd. And I think it could be an interesting way to end our part of the webinar, because the next speaker is going to really focus on the securitization and how it actually works within the ESCO model. So thank you for your attention.
Thank you, Giulia and Nicolò. I at least learned quite a lot about this topic, which is fairly new to me. I see questions already start coming in, and I also, to all the listeners, if you have any questions to Nicolò and Giulia, please put them in the question mark icon on the top right of your screen, and we will try to address these questions at the end of the webinar. So Nicolò and Giulia, if you are so kind to just stay with us, and then by the end, after Csaba's intervention, we will take a round of questions and answers, and who knows, maybe an interesting, fruitful discussion can also arise between you. So thank you for the information provided here. I think it's, as I mentioned at the start, we see that financing is a recurrent challenge for many ESCOs, especially the smaller one and smaller projects, ESCOs that don't have the required securities as requested by the banks in terms of collateral, or cannot meet the requirements that banks pose at times. That is at least a challenge that has been expressed by many of the ESCO associations and ESCOs we've been in touch with. I think this serves an example of initiatives that can overcome these barriers. I think we will talk more about your initiatives, also triggered by the questions that keep coming in. I think now it's time for Csaba to join the floor. Thank you, Nicolò and Giulia. We'll connect again soon. Csaba is a long-standing friend of the Global ESCO Network. We have been collaborating on previous webinars. He's joined our ESCO symposiums and is also, through his engagement with the EnerSafe Capital and SEFA, the Sustainable Energy Finance Association, one of the member associations of the Global ESCO Network. So he's the chairman and senior partner of EnerSafe Capital, which is a Luxembourg-based sustainable finance facilitator, and also EnerSafe Capital, one of the funding members of the Sustainable Energy Finance Association, SEFA, which is the European Trade Association for Sustainable Energy Industry. Csaba is a seasoned investment banker with a focus on the energy transition and sustainable energy assets. He has extensive knowledge on energy efficiency measures across both heating, cooling, lighting, solar PV sectors, and other energy efficient technologies. And he also has a profound understanding of e-mobility. His expertise is focused on standardization of contractual agreements, so energy performance contracts standardization. If you're more interested in this topic, you can go in our webinar library on our website and look for the ESCO model contracts webinar, where Csaba also provided some very useful insights on ESCO contract standardization and its importance for securitization. But here, during this webinar, we will look more at crowdfunding. So the previous presentation, I think, even though the impacts of Ener2Crowd showed big impacts, the focus on helping smaller projects, I think this presentation will take us to bond creation and securitization, which is basically the next level, playing with the big boys, getting the scale of finance to flow to the ESCO market. So with that, Csaba, I very look forward to your presentation and learning from what you have been cooking.
Thank you very much, Federico. It's always a pleasure being with you, and I'm blushing with all the nice things you've been saying about me. Yes, I'm old and I'm an investment banker. And actually, we have, for the past, I would say, 15 years, been focusing on the ESCO sector and with combined with securitization. If you could please go to the next slide. Now, we strongly believe, and actually it's quite funny, one of my sons once said that the energy transition is not happening, Daddy, because you are not producing enough product. And he, in one way, is right, because the younger generation is very, very keen on the energy transition, but they are not having enough product offered where they can put their money, which then could come via the crowdfunding mechanics. So what we are seeing is that crowdfunding and product creation as we do it are linked at the hip, and we, for nothing on earth, would like to compete with crowdfunders. We are investment bankers. We are producing products. So the important part is that in local markets, participants would like to invest into projects where they can identify themselves with. And that was very, very well documented by the presentation of Ener2Crowd, where local participants get better interest rates. Could I please have the next slide? Now, the big issue we see for ESCOs is that we are lacking a lot of harmonization and calculation in various elements. So the great Europe is fantastic, but it is not really harmonized as other capital markets would be. In particular, the ESCO model works more or less, except for the super ESCOs, the following way. Somebody says, why don't we change lamps in buildings? He speaks to a few friends and they say, great idea. They put a few thousand or maybe €1 million together. They go and visit their friendly banker. The banker says, you are coming with $1 million. Great, I'll give you 4. Now they start changing lamps. It works perfectly well. And the same person goes back to the bank and says, I would like to have more money. To which the banker says, well, either you bring in more security or more equity, or you will need to sell some of your receivables. And this is where securitization actually comes in. So in order to do this securitization, you need to have identical contractual arrangements. Because as earlier discussed by Ener2Crowd, there is always a due diligence process to be done. If the contracts and these ESCO measures are small, anywhere from 25 to, let's call it 100,000, if they all have different documentation, the lawyers are going to get very, very happy and rich because they will be needing to read the same documents all over again. Whilst if there is standardized documentation, it is very, very easy to streamline this. Could I have the next slide, please? So the key we are seeing that the more people use standardized documentation, the faster they can onboard clients. They can easily deploy capital. And if they then would need to dip into the securitization process, which as Ener2Crowd mentioned, they could do on an annual basis up to 5 million, suddenly there is movement. They can onboard more, they can have more profit, they can maybe reinvest their profit, with that increase their balance sheet. And what we see that the glass ceiling of the balance sheet is one of the key issues in the energy transition. It is not a question of these projects not working. It is not a question of people not wanting to pay. Yes, there are always what I call funny bunnies around, but generally, if people have got a benefit, they are going to be able and willing to share with you part of their benefits. And this is what we see as one of the big bottlenecks in the securitization and in the whole ESCO business model across Europe. Could I please have the next slide? And the next one. So what we have developed at EnerSafe Capital is something which is called SEAL. And this is actually mirrored on something which fellow investment bankers 30 years ago have invented when the American capital markets were suffering of very, very high interest rates. So there are white certificates available in Italy, in Spain, and in France. The French and the Spanish market are very, very similar. The most active is the French market. And white certificates are obligations of the energy sector to support the growth of the energy transition. Now, these white certificates, which are issued by the state and bought by the EDFs, the Totals of this world, subject to the project being implemented, are extremely safe payment methods. So what we came up with is, if ESCO is not having enough money, but is having a pipeline of projects, he can actually go to, let's call it EDF, and say, I will change cooling systems in the major retailers. For that, I will be entitled to white certificates, and they enter into a pre-purchase agreement. So now I've got an ESCO, I've got Total, and I've got the French state in a triumvirate, and I can actually buy at a discounted value this future receivable, which EDF will be paying for. I can go to Ener2Crowd, ask them to raise capital for this sealed product, give the proceeds of that offering to the ESCO. The ESCO is now having equity to go to his lending banker. The lending banker is going to give him a credit line. And with that, the whole transition is being sped up. As soon as the project is implemented, the ESCO will get his white certificates. The white certificates will be delivered to Total or EDF. Those then pay the proceeds, and with the proceeds, the sealed product is being repaid. This can speed up very, very much the energy transition, particularly in France and in Spain. There are other countries where there are white certificates, but they are not as well developed. In France, it is a 7 billion euro annual market and growing. And with the arrival of ETS2 in 2017, we will be able to expand the product further. Could I have the next slide, please? Now, what is securitization? Securitization is actually the purchase of future receivables in a securitization vehicle or compartment, and that is then being funded and sold off to financial institutions, private investors, God knows who wants to buy them. The main thing is, it is a transfer of risk from the ESCO to a new group of investors who are willing to take on this kind of risk, and with that liberating the balance sheet of the ESCO. And this is his constant bottleneck. So if either via Ener2Crowd initial funding or via bank funding combined with SEAL, the balance sheet can get deleveraged via securitization, then the ESCO itself is able to do more transactions, and that is speeding up the whole process. Could I please have the next slide? securitization in itself is nothing new. It has been in the market for many, many years. And if you think about it, the car sector is one of the most thriving securitization elements. The same thing is true for airplane engines, which are being sold on as a service basis. And it actually helps to speed up, to liberate balance sheets, and to give to the right investor a product which will give him long-term cash flows, which many, many people are looking for. Can I have the next slide, please? We are always speaking of conveyor belts. And the conveyor belt is a very, very simple concept, which again is standardized. So you've got a ESCO who does his lighting changes with standardized documents. As soon as he's having enough of his receivables, he comes to talk to a securitization platform provider. Maybe he comes and visits us. And we will then create for him a process whereby we will purchase his receivables. For that, it is important that he is having in his original documentation embedded transfer clauses. Otherwise, you would need to go to every counterpart and ask for their approval to get the transfer of the receivables, which is a nightmare. And the securitization vehicle, like a little sack, closes it, sells it via an Ener2Crowd or other providers, or if it's above 5 million, then it can go straight away into the institutional market, where clearly the pools are much, much bigger. But what we see, and it was confirmed by the presentation of Ener2Crowd, that there is a large demand of retail investors in high-yielding products. And Mr. Draghi and Mrs. Lagarde are insisting that there are anywhere from 13 to 15 trillions lying around in deposit accounts, not even in saving accounts, in deposit accounts which are very, very badly remunerated. So the distribution goes to investors. Investors pay to the crowdfunding platform. The crowdfunding platform pays the originator, which is the ESCO. The ESCO in turn pays off his bank, and we go back to square one, and we can continue producing these very, very attractive cash flows. And I think with that, I'm at the end of my presentation. Is there another slide? The benefits of securitization is it creates capital for the energy transition. It helps small and medium ESCOs to deleverage. It gives to retail investors product, and it helps to speed up the energy transition. So this is a final step in what Ener2Crowd has very, very well presented. And securitization is not a competing tool. It is actually an add-on using the same distribution channels. And I thank you for your attention.
Well, it is us thanking you, Csaba. Thank you for your insightful presentation. And I almost feel that we need to talk about having a follow-up webinar to our contract webinar to talk maybe more into details about the specific provisions that allow securitization in contracts and why they are important. But we can get back to that. For the listeners, yeah, thank you. For the listeners coming in, I think Csaba also mentioned the white certificates a lot. For your information, we are planning for a webinar dedicated to white certificates with the example of Spain on the 11th of December this year. So keep an eye open for the registration link on our website that will be coming up in not too long, we hope. Before that, we will have another webinar, the 18th of November, on measurement and verification and energy performance contract for facility owners, which will be run by Evo, our co-partner in the global ESCO network. And the importance of MMV, so measurement verification, was also highlighted by our friends at Ener2Crowd. I think your two contributions, so from Ener2Crowd and EnerSafe Capital, I think they were very good at complementing each other, looking at the practical approach of crowdfunding and then scaling up and using securitization to oil the machinery, let's say, of the financial system to increase the amounts that can be channeled towards the energy transition. We have some questions that have come in. I think I will answer the first one, which is practical matters. You can always find the presentations and recordings of our webinars on our website. So usually it takes around a week's time before it's uploaded, but you can always go back and see the presentations and recordings from this webinar. So for you, all of you that asked about that, you can just go directly to our website and access them, and all our previous webinars. We have several questions. I think some of them relates to technical terms. I think retail investor, you can correct me if I'm wrong, Nicolò, Giulia, or Csaba, but basically we're talking about private investors, so individuals using their money that they have in their savings to invest in these type of projects. So retail investors is, as I understand it, another word for individuals that are investing. Then we have some questions to Ener2Crowd, and some of them might become technical, but let's start with Nicolò and Giulia. What is the average investment size for Ener2Crowd projects?
I can take that question. So it really depends. So the projects can be in the millions, but usually it is a co-funding strategy of the project. So usually we take between 50,000 to 300,000. So that's usually what the companies come and ask at Ener2Crowd. Okay.
Well, then stay on, because I think there are several questions that we can take, and maybe Nicolò can also chip in if he wants to. What are the, it says here, protections given to the investors? So it's, any security. I mean, as investing always comes with a risk, but what are there any processes, procedures in place to protect the investors?
Well, okay, for this question I can reply. Consider that, as I said, every single project in the platform follows a specific path. The first one is the credit check on the company, and every single investors sign a financial agreement with the company, and it depends on the projects, in particular it depends on the company which kind of guarantees they want to give to the investors. Of course, more are the guarantees, less is the interest rate. So also the rule of the platform is to select the companies and the projects to be launched on the platform. Basically, in some of the projects that you can find on the platform today, we have I mean, I don't know how to translate it, the fideiussioni personali. Maybe Federico, you can help me. I don't know how to translate in English. Not the pledge, but also pledge on the loan. So like for the guarantees, also the fideiussioni. But sorry, because I don't know how to translate it in English.
fiduciary, maybe?
No,
Security.
Cosa?
Security.
Yes, like security personal of the shareholders.
Guarantee, maybe.
Yeah, sureties, yes, sureties of the shareholders, like specific, but it depends because, for example, also most of the time we also finance SPV, so special purpose vehicles of the companies, for example, of Enel, and in this case we ask the guarantee to the mother company. So every single project has to be studied, and every single project can have different kind of guarantees. So consider that the risk associated is also associated to the kind of guarantees that the company can give to the investors, but some of them also don't give any guarantees. So the interest rate is higher for this kind of projects. We can also reach 10-12%, more or less.
Well, okay, well, thank you. I think that's basically answers the question, and with higher risks comes higher gains, basically. Interesting, and this is not a question. Interesting to see that Enel, so SPVs cannot get finance for. Well, you would have thought that maybe the finance from their own company would be available at the lower costs, but just interesting to see that they prioritize outsourcing financing as well, even though they would have the resources in-house.
Yes.
There are several questions, and maybe I think I will translate some of these questions into one, and then see how many of them we can cover with your answers, and then okay. I'll try to fill in the gaps. I think maybe if you can provide a small history of how it came to be. Basically, I think basically how did it start? How did it get started? What are the challenges setting it up, etc. And can it go beyond the European market?
Okay. But you mean the challenge for Ener2 to found Ener2Crowd, basically?
Well, basically, I think it's maybe the questions relate from other markets that might be interested in looking for similar solutions, but they don't have available. At least it's only me deducting from the questions. But basically, how did you set it up, and what were the challenges setting this crowdfunding platform up?
But consider that we, because I'm not alone, we are 3 shareholders and we 4 shareholders, and we started 7 years ago, more or less. 2017 we started. 2018 we developed and we legalized the old platform. I say old because there was a completely different market in 2018. More or less, the market was very, very close to zero. And we were pioneers in that. Of course, the biggest challenges that we faced were legal challenges, because consider that we are doing the fundraising with the retail investors, and every time you touch the money in the wallets of the retail investor, you have to follow specific rules and specific basic rules. In this way, then the biggest challenge we faced also were to create the community, because creating a community is expensive in terms of time and in terms of money, because a community of investors that follows the company and trust the company is very, very difficult to create and to maintain this kind of community. But we have like investors since 2018 again, because it means that they like this kind of tools, financial tools, and this kind of and the kind of projects we publish on the platform in that way, no? Also, another very, very big challenge, of course, has been the IT part, because consider that today we manage 100,000 of transactions on the platform, and there are not a lot of suppliers, and also the suppliers that can follow this kind of activities, because we today use Lemonway. Lemonway is one of the biggest payment institution in Europe, and in order to start the activity with them, we also had to face with Bank of France, because we are also under the law of the French of Bank of France. So basically, the legal topic has been very, very, very difficult, but I mean, interesting, of course.
Okay, well, thank you. Thank you for, and I think it covered some of the questions. I think I'll take some of them that were not addressed. So what is the obstacle to fund projects across all of Europe? Is there a licensing process to go through? I think you answered that, but basically the regulation in Europe allows you to operate across all of Europe already. But how long does it take to fundraise a project on average? I think you also answered that between 1 to 3 months.
Yes.
And which eligibility criteria do you use?
Wait, sorry, Federico, give me 3 seconds, because my laptop is dying due to the energy that needs. Of course.
Yes.
We are talking about energy.
A higher energy efficiency on the laptop. As well.
Higher energy, but means also we need the energy. But if I don't plug in the laptop, the laptop can die. So sorry, can you repeat the question, please?
Maybe. I think most of them were answered in the presentation, and I just revoiced them. But I think, let me see, one that was not answered was, which are the eligibility criteria for the projects?
But first of all, the credit check. I mean, before looking at the project, look at the company. So the company must be eligible for the loan, because of, I mean, we are not a bank, but we act as in a similar way than like a bank. No, in particular for the lending crowdfunding, for the debt one, because for the debt one we need to follow a path that is very, very similar to a bank. Even if I can say we are completely say that we are not so blocked like a bank. So the bank can follow like KPIs, and if that KPIs doesn't follow, and if the company doesn't follow that doesn't match with that KPI, it means that the debt cannot be given. We look, of course, at the credit check of the company, but also on the project, because consider that the founders of the company and our team, most of us are basically engineers. So are not from finance, from the finance world. We also have finance guys, but first of all, we want to look at the project itself, because we perfectly know, for example, that if we take in Italy, we do a lot of PV plants. If a PV plant is well built and well connected to the grid, it's like a very, very secure investment, because it only needs sun. That's it. And with the sun, and with the correct sun, and with the correct maintenance, we perfectly know that that debt can be covered by only the sun. No, and the banks basically doesn't follow this kind of idea, because they only look at the which is the company, what are the guarantees that you can give me. So we start from the scratch, from the credit check, of course, but also from the project itself, because we are also able to analyze the project. In the bank, I cannot say anyone who can, I mean, check the yearly yield or how much a wind farm can produce in terms of energy, because basically everything is on that. Now, how much energy the wind farm can produce, can this quantity, and maybe the incentives, maybe the cost of the energy that the proponents sell to the market, can this productivity cover the loan or not? How much? These are the questions that we do at the beginning, not at the end.
Yeah, and for ESCOs, it would be the energy savings. So
yes, for ESCOs, the energy savings. I use the energy production because it's easier to understand, but it's the same with the ESCO.
So, well, thank you for that. I think we also have a question from South Africa, and it's far from Europe, but any chance that you would expand beyond Europe?
It's quite difficult because consider that today is very, very difficult. It's difficult to operate in Europe since due to what I said, due to the legal part, legal activities, which is very, very strong in Europe, in particular in Italy. All the bureaucracy is very, very weak. But we can operate. For example, we did one campaign, if I'm not wrong, in Africa, but with an European company. So the most important thing is that the company itself is based in Europe.
Okay.
So even if this company has a participation in a South Africa company, it's fine. The most important is that we finance only the European company. So going to another market, for example, also in US, in South Africa, in Asia, means to ask other similar authorization. I think that there will be like similar authorization like the European authorization, and it's very, very difficult to obtain this kind of authorization. So it should be project in the future. Yeah. But for example, in US, they have the Fed, which has completely different rules than in Italy and Europe in general. No? So we need also to be careful to take care on this kind of topic.
Okay, so basically, look for crowdfunding, existing crowdfunding players in your respective jurisdictions.
Yeah,
would be the first place to go. And Charles from South Africa, I think you can always reach out to us. You can find our email address on the website. We also have interesting ESCO activities, perspective for ESCO activities closer to your region in Mauritius. So if you're interested, you can also reach out to us and we can continue the discussion there. I think questions keep coming in, and something about governance and monitoring mechanisms. So what governance and monitoring mechanisms are most effective to guarantee transparency for citizen investor, especially multi-stakeholder renovation projects? So I would understand when it comes to monitoring, I mean, there are standardized protocols for M&V that I assume you would look out for in projects. Basically, that the energy savings would be measured and verified through an acknowledged protocol. Governance mechanisms, I mean, I don't know if I understand the question correctly. I don't know if you did, Nicolò.
No, maybe I can understand the question. I think that is linked to what I said about the renewable energy production, if I'm not wrong or not, because maybe you are asking how we check, how we manage the production. Let's always say, let's take the easiest project we can explain, like the PV, the standard PV plant. Of course, we need to manage and to check the productivity. So we need to know that that kind of project is linked to the grid, and we need to know the amount of energy that the solar panel produce. No, we do that sometimes. Some others no. It depends on the projects, and it depends because consider that for one specific project of a PV plant in the north of Italy, we linked also the production of the on time or in real time production of the PV plant linked to the finance of the project. So all the investors could see, I say could because the finance, if I'm not wrong, the loan was closed. I mean, a couple of years ago, finished a couple of years ago. But the investors can check the productivity of the PV plant and of course the installments that they receive from the company. And they were sure that if the PV produced the energy that were expected, they were sure to get the installments back. I think that maybe the question was related to this one.
Yes, I think so. Let us know if it was not. And we are already over time, so I see a lot of interest. But let me take a couple of questions. I think I have one for you more, Nicolò, and then I'll take one for Csaba. How do crowdfunding models manage long-term performance follow-up, particularly when savings are lower than expected? And let me add up, because then I'll take two questions in one, because they keep coming. What is the failure rate? So basically, yeah, I guess defaults of
on the project.
So I think they're actually related. So if you have lower performance, you have higher risk of defaults, etc. So maybe you can take them in one answer.
But first of all, consider that the crowdfunding, the tool itself, let's take only the lending one. I know that the lending one for the energy projects are the best, is the best solution. The equity is completely different, like for the technologies, energy technologies of startups. But if we take the lending crowdfunding one, consider that the lending crowdfunding, also in our procedures for the eligibility of a project and the company on the platform, needs a very, very short duration. So very short, I mean, shorter than the one that, for example, a PV plant needs to get a positive IRR, no? A positive internal rate of return. In this way, consider that we have projects, the duration of the loans variable between 2 years and 2 and 4 years, more or less. And in this way, consider that we we don't finance anyway the 100% capex of the project. So we finance 10, 20%, 30%. So the short term for the building construction, because the long term is given by a standard bank with the guarantees, with everything about that. So this kind of tools is perfect for starting in order to start to build the PV, the project. Then for the future, for the next 15 years, you need a standard bank which give the loan to the company, because we are not able to give loan longer than 4 years, 48 months, more or less. But the reason is very, very easy, because the investors want the exit, want to give back all the capital invested plus interest, of course, in a short way, in a short term, in short time, like maximum 48 months. About the defaults, yes, of course, we have defaults, because it's a standard to have defaults also for banks. Everything, as the European regulation wants, is public on the platform and is updated every day. Consider that we have more or less 3-4% of defaults on the project, on the loans. Of course, defaults that follows like all the procedures for the in order to get back the capital, no? So with the procedure of the court for everything, because for us the default is like what the company doesn't pay back the loan and go back to bankruptcy. So after the bankruptcy, there is like the court with all the stuff, legal stuff associated to that. But we have 3-4%. Every kind of project, every single project in default more is related to super bonus. I mean, most of you doesn't know what's happened in Italy with the super bonus 100% that Giulia mentioned before, but it was a very interesting tool for the renovation of the building, but it was also a very difficult tool from the financial point of view for the companies. And it got a lot of companies to bankruptcy, in particular in the building construction field. That's it.
Okay, well, thank you very much, Nicolò. I have one question for you, Csaba. I hope you're still with us. So, Csaba, I think this question relates to maybe the image that you shared, if I understand it correctly. What is the return on this type of securities compared to the crowdfunding. So, and if I might interpret it, so if they're part of the same system, the expectation is that they will probably also give different returns on the investments if you step in at different stages of the cycle. But maybe you can elaborate on maybe not only the returns, but how do they differ as in terms of investment strategies.
So as Nicolò very well said, there are various returns for various stages in a project. So if you are, and let's go to lighting, or let's stay with the PV, because PV is very easy to understand. Until you don't have feed-in tariffs, that's the highest risk for the project. Once you've got stable cash flows coming in, and you've got stabilized hours, you can easily refinance those cash flows, and clearly they will be a few basis points lower because it's an established business model. We see it very well in the lighting sector. Let's call it that the onboarding of returns is around 8 and 10%. Once a portfolio of different relighting projects has been done, it's probably 300-400 basis points lower, meaning anywhere from 6 to 7%. And that I would say benefit goes straight to the pocket of the project owner. So he's having a yield pickup at the same time while de-risking his portfolio. I hope it answers the question.
Yes, I think so. But maybe if I can add to that, would then, in a crowdfunding scenario, I would assume you would invest in a project, but while the security is a bundle of projects.
Exactly.
So you're also diversifying, so therefore also lower risk. So if your project you have invested in goes bankrupt, you have a higher, again, the risk and return. You're investing in one project, higher risk, higher returns, while the security is a pool of projects, lower risk, lower returns.
Yes, and that's one of the beauties of securitization, that the various, let's call it 50,000 euro projects, which you put into a bond of 5 million or up to 5 million, is very, very granular. So your risk profile is completely changed, and that is something which makes it attractive for long-term holders, because typically these lighting contracts are 7 years. So if you implement it, then you stabilize it. So implementation is a few months, then you stabilize it for a year, which then means that you can issue a bond of 5 years over a pool of assets. And that's a fairly, or in our opinion, is an extremely safe product.
So that maybe just reflecting on the question, maybe that's also something to consider. That's basically the direct investment through crowdfunding in a project is for one type of investor profile, short-term, higher risk, higher return, while the security is for the longer term, low risk, but lower return.
You are spot on. You're spot on. It's always the beginning of any project, as Nicolò very rightly said, which is the most risky one. It might happen, it might not happen. There are delays. You can't get access to the grid, God knows what. But once it is producing and you've got a decent counterpart, then your risk is much, much lower. And by bundling similar risks with similar contracts, with similar maturities, you're getting a very solid, still good return product.
Well, I think on that note, thank you very, very much, Csaba, Nicolò, Giulia. I learned a lot to reflect on. Dear listeners that have joined online, thank you for staying with us till the end. see the numbers have actually stayed quite stable, which is a very good indication that also the discussion at the end of the webinar was interesting. So thank you all for your great contribution, especially the speakers, all the questions that have been asked. Please stay tuned, go to our websites, look out for our upcoming webinars, and see you next time.